Hi, I'm Sam. Welcome to my off-grid farm and to off-grid field school. I have spent years of experience watching small farm products earn money each month, lose money, and quietly pay their own costs. Today I'm going to teach you a 10-offer income mix that can reach $2,000 in monthly gross sales. This is a work-diversified example, not a guarantee. Prices, demand, permits, and labor vary by place. The smallest test costs about $40. The largest lane can demand $600 before the first sale. Please watch until the end, because each part builds on the last, and one missing cost can break the plan. The surprising payoff is not one perfect product. It is a 4-line ledger that shows which offers deserve another month. Most people overlook that control point. Part 10, the one that ties everything together, turns scattered weekend sales into a measured farm business. The problem is not a lack of things to sell. A homestead produces vegetables, eggs, seedlings, herbs, honey, wood, compost, mushrooms, preserved food, and useful skills. The problem is choosing too many before proving demand. A full table can still lose money. You can sell $300 and spend $340. You can work 18 hours and forget to price your time. You can fill jars before learning that your state forbids the recipe. Gross sales feel good. Net profit pays bills. Start with one rule. No product earns a permanent place because it looks authentic. It earns a place when repeat buyers cover materials, packaging, market fees, travel, spoilage, and your labor. Oregon State Extension describes profit as gross returns minus production and marketing costs. That sentence is the whole board. Write it above the ledger. Your first test has 4 columns: units sold, cash received, cash costs, owner hours. Add a 5th column for customers who ask to buy again. That 5th number matters more than social attention. 10,000 views cannot eat unsold lettuce. 12 neighbors returning every Friday can. Use a 4-week trial. Spend no more than $100 on a new offer. Make a small batch. Sell through one channel. Record each hour. Stop when legal questions are unanswered. The FDA says home food businesses must check federal, state, and local rules. That means jam, eggs, meat, dairy, mushrooms, baked goods, and prepared food cannot share one lazy legal assumption. The first danger is inventory. 20 trays of seedlings look valuable in March. In June, they become compost. The second danger is equipment. A $1,200 dehydrator cannot rescue weak demand. The third danger is unpaid labor. $40 of sales can hide 5 hours of washing, labeling, messaging, driving, and cleanup. Here's what most people get wrong. They copy a product, not a buyer pattern. A roadside commuter wants a fast bundle. A chef wants consistency. A CSA member wants a dependable weekly share. A tourist wants an experience. One farm can serve all 4 later. It should not start there. The common error is believing one viral item will carry the property. That is the enemy. It pushes you toward big batches, new machinery, and a single fragile customer group. Quiet farm income usually comes from several small offers sharing the same land, tools, and buyers. One flock can supply eating eggs, hatching eggs where lawful, and compost inputs. One greenhouse can supply seedlings, herbs, and workshop demonstrations. One woodlot can supply split firewood, kindling bundles, and pruning service. Now the honest part. Diversification can also become chaos. 10 offers do not mean 10 full businesses. They mean 10 candidates. Test 2, keep 1, add the next only after the ledger closes. If you cannot name the buyer, sale day, unit cost, and permit path, the offer is not ready. Separate revenue from profit. Assume a dozen eggs sells for $6. Feed, cartons, bedding, breakage, flock replacement, and labor still come out. Assume a seedling sells for $5. Seed, mix, pots, heat, bench space, losses, and watering still come out. Assume a firewood bundle sells for $12. Fuel, saw wear, splitting, seasoning space, delivery, insurance, and labor still come out. Then separate product fit from channel fit. USDA lists farmers markets, CSAs, food hubs, and on-farm markets as different outlets. Each changes the economics. A farmer's market can give higher unit prices, but it consumes a full day. A restaurant may pay less per unit, but buy 20 units in one handoff. A farm stand avoids travel, but traffic and signage become your problem. Online orders reduce guessing, but pickup discipline becomes the work. Part 1 of 10 is eggs. Start with the buyers you already know. Offer one pickup window. Use clean cartons and clear dates. Do not promise a weekly quantity until the flock proves it through hot and cold weeks. A modest test might target 30 dozen a month at $6 or $180 gross. Replace both quantity and price with local numbers. Part 2 is seedlings. Grow only varieties already requested. Take deposits where your rules allow. A 40-plant month at $5 gives $200 gross. The risk is timing. Miss the local planting week and demand can vanish. No spreadsheet fixes a dead season. But the first two offers share a ceiling. They are seasonal, biological, and perishable. The next lane uses smaller batches and higher value per pound. Do not hear the next 8 as a shopping list. Hear 4 connected lanes. Lane 1 is weekly staples, eggs, herbs, salad bundles, and mushrooms. Lane 2 is seasonal starts, seedlings and cut flowers. Lane 3 is shelf-stable or slow-moving goods, honey, beeswax items, kindling, compost, and lawful preserved foods. Lane 4 is skill, repair, setup, farm walks, or workshops. A strong mix serves repeat need, seasonal peaks, stored value, and paid knowledge. Part 3 is culinary herbs and simple garden bundles. 10 weekly bundles at $8 for 4 weeks give $320 gross. Use what already grows well. Wash, pack, label, and cool it correctly. Do not plant 40 feet of basil because one person praised pesto. Pre-sell 10 bundles, then plant for 12. The extra 2 cover loss. Part 4 is gourmet mushrooms. This is a separate controlled enterprise, not a damp corner experiment. Penn State Extension treats mushroom production as a business needing income, cost, and profit estimates. A work target of £30 monthly at $12 gives $360 gross. Substrate, culture, climate control, packaging, sanitation, losses, and delivery remain costs. Sell to one chef or one pickup list before expanding the fruiting room. Part 5 is cut flowers. Small mixed bouquets can use edges and succession beds. A test of 20 bouquets at $15 gives $300 gross. The hidden work is harvest timing, conditioning, buckets, water, wrapping, and unsold stems. Photograph the exact weekly mix. Do not promise peonies in August. Part 6 is honey and beeswax goods. Treat honey as food. Treat candles or wraps as separate products with separate safety and labeling checks. A small monthly example might combine 20 jars at $10 and 10 wax items at $8. That is $280 gross. Bee health, extraction equipment, jars, labels, wax loss, seasonal yield, and local rules remain real. If these first 6 parts changed how you think about farm income, hit subscribe. The next 4 get less perishable and more useful in winter. Here is the part that matters most. The best product mix follows one buyer through the year. The spring customer buys seedlings. The summer customer buys herbs. The autumn customer buys honey. The winter customer buys kindling or a workshop seat. You are building continuity, not clutter. The governing principle is simple. Prove repeat demand before adding product variety. That is the line to remember. A product sold twice to one buyer can be more valuable than 5 products sold once. Repeat demand reduces waste, shortens selling time, and makes next month's production less speculative. Part 7 is seasoned firewood and kindling, where zoning, transport rules, insurance, and firewood regulations allow. Sell measured bundles, not vague piles. A worked month might be 20 bundles at $12 or $240 gross. The raw wood is not free. Count saw fuel, chains, splitter time, drying space, handling, delivery, and the years required to grow another tree. Do not move firewood across restricted areas. Pests travel in wood. Part 8 is screened compost or worm castings. Sell only a product you understand and can describe honestly. A $10 bag is not $10 profit. Count feedstock handling, contamination control, curing, screens, bags, storage, and delivery. A test of 20 bags gives $200 gross. Keep a sample from each batch. If smell, heat, weeds, or unknown inputs make you uncertain, do not sell it. Part 9 is lawful shelf food. This could be bread, dried herbs, jam, pickles, or another product explicitly allowed in your jurisdiction. It is not a loophole. The FDA points home businesses towards state and local health departments because rules differ. Start with one approved recipe and one label. A worked 25-unit month at $8 gives $200 gross. Ingredients, jars, seals, energy, testing, kitchen time, market fees, and spoilage remain costs. Part 10 is a service or workshop. This is the one that ties everything together. Offer a 2-hour garden start session, tool sharpening day, coop cleanout, raised bed setup, pruning help, or a small farm walk only where your skills, insurance, zoning, and safety plan support it. 4 seats at $50 give $200. $2 $100 service calls give the same gross. Materials stay itemized. My grandfather's rule was short. A tool must earn its hook on the wall. The same applies to an enterprise. One repeat buyer does the lifting. A clean booking window does the delivering. The ledger decides whether the line stays. But there is one more thing that has nothing to do with making another product. It is the cost of selling itself. Selling time is a production cost. Count it. A 6-hour market day can erase a good margin. So design the system around shared trips, shared packaging, and shared buyers. One Friday pickup table can carry eggs, herbs, mushrooms, honey, and pre-ordered seedlings. One monthly workshop can introduce the same customers to the next seasonal offer. Use a 3-tier screen. Tier 1 asks whether the offer is legal and safe. If no, stop. Tier 2 asks whether 10 real buyers exist within a reasonable route. If no, test demand before production. Tier 3 asks whether the offer meets your hourly floor after every cash cost. If no, raise price, change channel, reduce work, or stop. Choose an hourly floor before the trial. Use $20 only as an example. If an offer produces $160 after cash costs and takes 8 owner hours, it returns $20 per hour before tax and long-term equipment replacement. If it takes 16 hours, it returns $10. Same sales, different business. Now combine channels. Weekly pickup handles staples, pre-orders handle perishable starts. A farm stand handles trusted self-serve items only where security and local rules fit. One chef account handles consistent mushrooms or herbs. A workshop handles skill. Avoid driving 5 routes for 5 $20 orders. USDA reported $2.4 billion in direct-to-consumer food sales by small family farms in 2023. That proves the channel exists at national scale. It does not prove demand at your gate. Your proof is local: 10 conversations, 5 deposits, 4 weeks, and a closed ledger. Use one product card per offer. Write buyer, unit, price, variable cost, minutes per unit, sale day, permit source, and reorder count. Red means legal or safety unknown. Yellow means margin unproven. Green means 2 profitable cycles with repeat demand. Never color a card green because the first batch sold to friends. If you are building one of these lines, drop a comment and say which one fits your land. That conversation is worth more than copying a stranger's price sheet. 8 parts so far, but having 10 candidates and operating a dependable mix are different problems. The next stress test solves both without buying more equipment. Here is the worked month. Again, it is not a promise. Prices, demand, permits, taxes, insurance, and labor vary. The goal is to show the math, then show where it breaks. Lane 1 is weekly produce and eggs, $720 gross. That could be 30 dozen eggs at $6 plus 45 herb bundles at $12. Lane 2 is plants and mushrooms, $480 gross. That could be 40 seedlings at $5 plus 20 pounds of mushrooms at $14. Lane 3 is shelf products, $400 gross. That could be honey, beeswax goods, approved bread, or another lawful mix. Lane 4 is service or workshops, $400 gross. That could be 8 $50 seats or 4 $100 calls. Total gross sales, $2,000. Now subtract. Assume $650 in feed, seed, substrate, packaging, ingredients, fuel, market fees, and other variable cash costs. That leaves $1,350 before fixed costs, tax, insurance, depreciation, losses, and owner labor. Assume 60 owner hours. The remainder equals $22.50 per owner hour before those other obligations. Change the assumptions and the answer changes. Stress test 1, sales fall 25%. Gross becomes $1,500. Variable costs may not fall as quickly because some product is already made. If cash costs stay $600, only $900 remains before fixed costs and labor. Stress test 2, one service client cancels. Gross falls $100, but 4 travel hours may disappear too. The hourly result can improve. Stress test 3, eggs face a feed price jump. Raise the local price only if buyers accept it. Otherwise, shrink the flock line and keep the better offer. Now, what no one else making this kind of video will tell you: eggs break in heat, seedlings expire with the season, herbs wilt, mushrooms demand sanitation, flowers miss their week, honey yield moves with weather, firewood takes space and time, compost can carry contamination, shelf foods carry legal responsibility, services carry liability, every line can fail. One more number most people overlook: reorder rate. If 20 buyers create 30 sales, the rate is 1.5 sales per buyer. Track it monthly. Rising reorders can support a larger batch. Falling reorders warn you before the cash total collapses. Here is the master list: eggs, seedlings, herbs, mushrooms, flowers, honey and wax, firewood, compost, lawful shelf food, services or workshops. 10 candidates. Do not launch 10. Choose one product and one skill lane. Run 4 weeks. Keep the line only when demand repeats and the ledger pays your floor. Under $100 can test herbs, seedlings, kindling, compost bags, or a basic service. Under $300 can test a small egg, mushroom, honey, flower, or lawful shelf food batch if your existing equipment and rules fit. A larger setup can exceed $600 quickly. These are planning brackets, not vendor quotes. Get local prices before spending. The $2,000 outcome comes from the mix, not a viral hit. Weekly staples create rhythm. Seasonal starts create peaks. Shelf products hold value. Skills sell without growing another row. Shared buyers and shared pickup windows reduce the cost of selling. The 4-line ledger closes the open loop: units, cash, costs, hours, then reorder count as the control. USDA's direct sales data and agritourism data show real national channels. Oregon State Extension warns that farm direct work still needs production costs, marketing costs, customer research, and an enterprise screen. The IRS tells farmers to keep records that measure each enterprise's financial performance. That is not nostalgia. That is proof of a business discipline. The quiet mistake is counting farm abundance as sellable inventory. A garden can be full while the order book is empty. The second mistake is counting gross sales as personal income. The third is making food before reading the rule. The fourth is hiding owner labor. Invert all 4, find buyers, price every cost, check the rule, record the hour. Income is not something a homestead magically produces. It is something you test, price, record, and repeat. I want to know, where do you live? What can your land produce reliably? And which one of these 10 candidates would you test first? The answer is different near a busy town than at a remote winter cabin. Drop it in the comments. This worked scenario is not a promise. It is a way to make the first decision with your eyes open.